For corporate accounting, we started with two problems. We saw some journal entries and cash book entries. So we're moving on today and we're going to be solving more questions. So let's look at question number 3. D Limited issued 10,000 equity shares of rupees 10 each at a premium of rupees 2 per share. The amount payable as rupees 2 on application, rupees 5 on allotment including the premium, and the rest on the first and final call. Applications were received for 12,000 shares. Excess application money were refunded to the applicants. All monies were duly received except the first and final call monies on 1,000 shares. So show the journal entries and cash book entries in the books of D Limited. So the third problem we are solving is a problem which also has premium. And in this question, they've said we have to prepare the journal entries as well as cash book entries in the books of D Limited. Okay, so let's start immediately with the preparation of your cash book and your journal entries. Now, of course, you can go through the entire process of dividing, writing how many shares there are, like how we've done previously. Okay, so we have 10,000 shares at the rate of rupees 10 each with a premium of rupees 2, so plus 2. And this rupees 10 is subdivided as rupees 2 on application, rupees 5 on allotment, which includes premium, so it is 3 plus 2, and the rest on the first and final call. So 2 and 3, 5, 5 minus 10, another rupees 5. So on the first and final call, rupees 5. And they've said that applications were received for 12,000 shares, which means there is an excess application of 2,000 shares. And excess application money was refunded to applicants. This is fully refunded. And additionally, they've given all monies were duly received except the first and final call monies on 1,000 shares. So calls in arrear is equal to 1,000 shares on first and final call. Okay, so we have all of our details laid out for us. Now we can proceed with the preparation of your books. So in the books of D Limited, cash book, journal entries. Again, you can write the journal entries first and then the cash book later, whichever you're comfortable with, whichever you want to write first. Okay, so we have cash book and journal entries. Now the reason why I'm writing cash book first is because the first entry is the receipt of cash, right? When people are subscribing to your capital, you're going to be receiving cash. That is why I've just written the cash book first. Now, of course, there is no specific, there's no specific rule that we have to write journal first or cash book first. So either way. Okay, so in the cash book, in the books of D Limited, date particulars rupees, debit credit column, and then we have also the journal entries, date particulars, debit credit column. Okay, so the first entry we know is when they are subscribing, when the public is subscribing. So when people are subscribing, we're getting money, right? So when we're getting money, the journal entry is usually cash account debited or bank account debited to share application account, right? Bank account debited to, now here they've given specifically equity shares. So I have to write equity share. Now this is the first amount, right? Application. So to share application account. Please write in full, okay? All right. So the amount, we can write it as we have received subscription of 12,000 shares and the amount is rupees 2 per share. So in the amount column, rupees 24,000. There are no dates given. Date columns will remain empty. Okay. So we have received the share application. The next step is to transfer the share application account, right? So when we're transferring, it doesn't affect your cash book as such. Okay, so firstly, equity share application account, equity share application account debited to equity share capital account. Now here, remember, we have an oversubscription of shares, and in case of oversubscription, 2,000 shares were fully refunded. That means there will only be 10,000 shares at the rate of rupees 2 each. So this is rupees 20,000. But remember, 2,000 shares are fully refunded. If they're refunded, it means it has to go through the bank account again, right? So you've already transferred the money, bank account to equity share application account. Now, from equity share application account, we have to send it out. Therefore, by equity share application account. This is those 2,000 shares that were rejected at the rate of rupees 2 each. So rupees 4,000. Okay, remember to write the narration as well. Alright, moving on. The next is allotment. In case of allotment, you have 3 plus 2. Okay, 3 plus 2 securities premium as well. So firstly is a due entry. Equity share equity share allotment account debited to equity share capital account. Okay, so firstly let's do this before we write the securities premium account. Okay, so equity share allotment account, on share allotment we are supposed to receive 5 rupees. Okay, we're supposed to receive 5 rupees. So let's write this down. 10,000 shares at the rate of rupees 5 each. So that will make it rupees 50,000. Now out of this rupees 5, equity share capital is only rupees 3. Okay, only rupees 3. So in the capital we can only transfer at the rate of rupees 3. So this is 30,000. Now we have a balance of rupees 20,000, which is to be transferred to equity, or no, just securities premium account. Securities premium account. Okay, and clearly we see in the question rupees 2 is a premium, right? So 10,000 at the rate of rupees 2 each, which is 20,000. Fine. This is our due entry. Okay, make sure you remember this is your due entry. Now we have to receive this money on your equity share capital as well as on the securities premium. Okay, so let's receive this money. We'll be receiving it in the cash book, which will be bank account debited to equity share allotment account, which is 50,000. So to equity share allotment account. Wow, my cat is very hyper today. Okay, so equity share allotment account, rupees 50,000. Okay, there the entire amount or all the monies is going to be received. There is no calls and arrears in your share allotment account. So finally you have your final call, or your first and final call. Due entry first, equity share first and final call, equity share first and final call account debited, due entry, right? So to equity share capital account amounting to rupees 10,000 at the rate of rupees 5 each is the balance amount, so rupees 50,000. Okay, now there are calls and arrears, 1,000 shares and first and final call. That means on this amount we're not going to be receiving cash. Okay, we're not going to be able to receive cash in this amount, so we have to make the adjustment in the cash book when we're receiving. Therefore, bank account debited to equity share first and final call account, total 10,000 shares, right? But out of 10,000 shares we're not going to be receiving on 1,000 shares at the rate of rupees 5. So 9,000 shares at the rate of rupees 5 will give us rupees 45,000. Okay, so this is the amount we're receiving on share first and final call. Now what about the balance that we have not received? The balance will be transferred to your calls in arrear account. So remember, it was bank account debited to equity share first call account, first and final call account. So that amount that is remaining, 5,000, will be transferred to our calls in arrears account. So calls in arrears account debited to equity share first and final call account, rupees 5,000. Okay, and then you can write in the narration being amount not received on your first and final call. All right, so with this, journal entries are done. That means we can close down our cash book as well. So cash book total comes to rupees 1,19,000, and you have balance. Okay, you'll be having a balancing figure by balance carried down rupees 1,15,000. Okay, so this is it for the question on D limited. Remember, here we're having premium as well as calls in arrears. Okay. We have another question, question number 4. Konica Limited registered with an authorized equity capital of rupees 2 lakhs divided into 2,000 shares of rupees 100 each, issued for subscription of 1,000 shares payable at rupees 25 per share on application, rupees 30 per share on allotment, rupees 20 per share on first call, and the balance as and when required. Application money on 1,000 shares was duly received and allotment was made to them. The allotment amount was duly received in full, but when the first call was made, one shareholder failed to pay the amount on 100 shares held by him, and another shareholder with 50 shares paid the entire amount on his shares. The company did not make any call. Give necessary journal entries in the books of the company to record these share capital transactions. Now, the fourth question with Konica Limited, it's quite lengthy, so it seems quite intimidating. However, it's quite simple. It's a very small solution. All right, so I've already written a gist of the question. So in the question, they've given authorized capital is 2,000 shares. Authorized, remember, I've given you a segregation meaning of the different types of share capital. So authorized is the maximum limit that, or the maximum number of shares that a company can issue. So authorized capital, 2,000 shares. Out of those 2,000 shares, we've issued only 1,000 shares. And they've issued at the rate of rupees 100 each. They've given rupees 25 on application, rupees 30 on allotment, rupees 20 on first call, and balance as and when required. So this is your balancing amount. All right, and then further, they've given application money on 1,000 shares was duly received. So this was fully subscribed to. There is no oversubscription. There is no undersubscription. So make sure you've read the notes before you are moving on to this problem, where I've given the meanings of all these different kinds of subscription as well as pertaining to share calls as well. Okay, so here in this question, we have two additional calls, which is calls in arrear and calls in advance. Now, calls in arrear we've already dealt with in the previous question. So it's given here 100 shares on first call, and then calls in advance, first call 50 shares. Okay, calls in arrear meaning they haven't received money on 100 shares on your first call. Calls in advance meaning they've received money on 50 shares for the first call as well as for any other future calls. Okay, so for the future calls also, they've already paid in advance. And then additionally, they've given no other calls were made. So final call and all, after the first call, nothing else was done. All right, so let's begin. They've said to only prepare the journal entries in the books of accounts. So in the books of Konica Limited, we've prepared the journal entries, date, particulars, debit, credit column as usual, right? So first, the bank account when you're receiving the share application money. Okay, firstly, it is the receipt of application money followed by the transfer of the application money. So since it's been fully subscribed and there is no oversubscription of shares, it'll be a very simple journal entry. So firstly, receipt of money, there is no date given. So bank account debited to. Now, firstly, check what type of shares have been issued. Here, they've given you authorized equity capital, which means these are equity shares. So, to equity share application account. Remember to write in full. Okay, if you're not writing in full, your examiners may not understand when they're correcting the papers because when you're writing in short, obviously, it's just for your understanding or for your ease. Okay, so make sure you're writing in full. Bank account debited to equity share application account. This is on 1,000 shares at the rate of rupees 25 each. And your narration, don't forget your narration ever. Rupees 25,000. Okay, and then the transferring entry, equity share application account debited to equity share capital account. Full thing is going to be transferred, and your narration transfer of application money to share capital account. Okay, and then the next is the allotment. Again, an allotment, the same simple entries, nothing else has been given, no premium, no discount, nothing. So equity share allotment account debited. This is your due entry to equity share capital account. This is 1000 shares at the rate of rupees 30 each. So rupees 30,000 being amount due on share allotment. And then receipt. Bank account debited to equity share allotment account. Since entire thing is received, rupees 30,000 will be transferred, being amount received on equity share allotment. Okay, and then we're going to come to your first call. Okay, and in the first call is where you are having the call in arrears and the call in advance as well. So firstly, the due entry. The due entry remains unchanged, meaning it's going to be the very simple equity share first call account to equity share capital account, because you're asking for money. It's only after you've asked the money will the people make any will make decisions whether to pay now or to pay in the future. Okay, so it'll be equity share first call account debited to equity share capital account, 1000 shares at the rate of rupees 20 each. So rupees 20,000. Here you're just asking, remember, you're just asking. And now we will see the changes that have to be made, or any adjustments that have to be made. Now we'll see it in the receipt entry. So firstly, when you're receiving bank account debited, you're receiving on share first call, right? So to equity share first call account. I'm leaving space because obviously I'll be making some changes. I'll be making some additions. So remember, you had 1000 shares, okay, and your calls in arrears is on 100 shares. So 1000 minus 100 will be 900 shares, correct? So on 900 shares, how much will you be receiving? And then after that also, so 900 shares into rupees 20. This is on our first call. Okay, this is based upon this calculation is based upon the calls in arrears. Okay, so leave this first, and then remember there are calls in arrears, right? So calls in arrears account debited, the amount that we're not receiving, this will be 100 shares at the rate of rupees 20 each. So it will be rupees 2,000. Okay, rupees 2,000. Now remember, there's also calls in advance. So calls in advance is exact opposite entry to calls in arrears. So it will be 2 calls in advance account. Now in case of calls in advance, it is 50 shares, and calls in advance is your in the future, what are the share? Now because you're saying final call was not made, so therefore we're going to be paying your first call. Okay, paying your first call already here, part of your 900 plus the future calls. Now in the future you have only rupees 25 left, so at the rate of rupees 25. Okay, let me explain the calls in arrears once again. Application done, allotment done, first call also done. So the calls in arrears you can only pay on this rupees 25. Oh sorry, calls in advance we can only pay on rupees 25, which has not yet been called, but the shareholder has paid already 50 at the rate of 25. So this is going to amount to rupees 1,250. Okay, and share first call account amount will be rupees 20,000. The same amount we're transferring. Okay, the reason why we're transferring the same amount is because we have a calls in arrears account. If we did not open a calls in arrears account, this amount would have reduced. Okay, all right, so bank account will be 900 shares into rupees 20, which includes the calls in arrears, but to this we also have to add the amount we are receiving in advance, which is 50 shares into rupees 25. Okay, so I hope this is somewhat clear. So it will be 900 into rupees 20 is 18,000. So plus 50 into rupees 25, 1250. So it should be 19,250. This is the amount we're transferring to our bank account. Okay, remember, bank account excludes calls in arrears, includes your calls in advance. So you can just cross check now. 19,250 plus 2,000 is equal to 21,250. This is also equal to 21,250. So debit and credit has balanced out. So this is your last entry pertaining to this particular account. So here we can write a narration. Okay, let me just write the narration here, being amount received on first call except on 100 shares being calls in arrears, and advance received on 500 shares as well. Again, you can write the narration how you understand it, whichever way, however you find it easier to recall, however you find it easier to remember, just write it that way. Okay, so this is the solution to the question pertaining to Konica Limited. Limited makes an issue of 10,000 equity shares of rupees 10 each, payable as follows: rupees 2 on application, rupees 3 on allotment, and rupees 5 on first and final call 3 months after allotment. Applications were received for 12,000 shares and the directors refunded the excess application money. One shareholder who was allotted 20 shares paid first and final call with allotment money, and another shareholder did not pay allotment money on his 30 shares, but which he paid with first and final call. Directors have decided to charge and allow interest, as the case may be, on calls in arrears and calls in advance, respectively, according to provisions of Table A. Show journal entries and cash books in the books of the company. Now, in this question, X Limited, I've already given the specifications that we are supposed to have in the problem. All right, so it has issued 10,000 equity shares at the rate of rupees 10 each, which is subdivided into rupees 2 on application, rupees 3 on allotment, and rupees 5 on your first and final call, right? Total rupees 10. So, however, you've received application on 12,000 shares, which is clearly an oversubscription, and they've given that excess was refunded. If excess is refunded, it means 2,000 shares were refunded. So 2,000 at the rate of rupees 2 each, 4,000 was given back. Now, additionally, they've given certain specific information. They've given on 20 shares, first call is received with allotment money. Okay, so when the shareholder who's holding 20 shares, when he was paying allotment money, he paid also for your first call, which means there is a calls in advance. Additionally, on 30 shares, there was a call in arrears on your allotment. Okay, on call allotment, on 30 shares, the shareholder did not pay money on the share allotment. However, when they called for the first call, he paid for the first call as well as for the allotment altogether. Okay, so instead of paying the first call money, the allotment money, he forgoed the allotment money and paid it together with your first call. Okay, and then additionally, they've given interest has been charged and allowed as per provisions of Table A. Now, the Table A that we're talking about, it states that if a company is having calls in arrears, or if a company is having calls in advance, and in certain situations, if the articles of association of a company provide for interest to be charged, and if the company has adopted Table A, then in case of calls in arrears, now remember, calls in arrears is when a person doesn't pay the company. Okay, if you're not paying the company, it means it's a fine, right? There should be charged a fine. So when you're paying later, you have to pay it with an interest. So on calls in arrears, interest charged is at the rate of 5% per annum meaning per year, right? Okay, and then on calls in advance, remember this is as per Table A. So on calls in advance, you are paying earlier than they've called for, so you'll be receiving interest on that. You'll be receiving kind of like a reward. So interest payable This again as per table A at the rate of 6% per annum. Okay, calls in arrears charged 5%, calls in advance payable 6% per annum. Okay, so now that we have all the details, let's move forward to preparation of the journal entries as well as cash books of the company. So the first entry, of course, is the receipt of your application money. So on receipt of application money, because we're preparing the cash book, we should not record in a journal entry, correct? We have to go to our cash book. Okay, so in the cash book, remember, date particulars rupees, date particulars rupees. Okay, remember those columns, and debit and credit side. So firstly, on our share application, we're receiving money. So bank account debited to share application account. So first entry will be to equity. If it's given that there are equity shares, then make sure you're writing to equity share application account. We are receiving 12,000 shares. 12,000 was subscribed to at the rate of rupees 2 each, which is rupees 24,000. Okay, firstly, application money received. Next, transfer of application money to your share capital account. So the journal entry will be equity share application account debited to equity share capital account. Remember, we have 2,000 shares which are in excess over subscription. So that amount, remember, we can only transfer how much we have issued. Okay, only as much as we have issued. So it should be 10,000 shares at the rate of rupees 2 each, so rupees 20,000, and the excess money has to be refunded, therefore by equity share application account. So equity share application account, the balance money that should be refunded, rupees 4,000. Okay, rupees 4,000, which has been refunded. All right, so next is your equity share allotment account. So on equity share allotment account, first entry is your due entry. So write it, equity share allotment account debited to equity share capital account. So on due, 10,000 shares at the rate of rupees 3 each. We are calling for this amount. So rupees 30,000. Okay. Right. So in case of the equity share allotment account, we have an amount here given, 30 calls in arrears, right? On 30 shares, you have calls in arrears. So, when you're receiving the money, let's go to your cash book now. Let's receive the money first on how much we're supposed to receive. So to equity share allotment account. Now on equity share allotment account, we were supposed to have 10,000 shares, right? 10,000 shares, but out of these 10,000, we have 30 shares which are calls in arrears. So minus 30 shares, and then at the rate of rupees 3 per share. So 10,000 minus 30 at the rate of rupees 3 per share will give you an amount of rupees 29,910. Okay, so this is 29,910, which is the amount that is received. Now the balance amount will be transferring it to our calls in arrears account. So write it down now. Calls in arrear account debited to equity share allotment account. Equity share allotment account, which is 30 shares at the rate of rupees 3 each. That gives us rupees 900 in total. Okay, so we've dealt with also with our calls in arrears account. And besides that, you also have a certain amount on your calls in advance, right? Here you've received, here on 20 shares, you've received calls in advance as well. So when you're receiving it, it'll be bank account debited to calls in advance account. Okay, bank account. So let's come to your cash book. Bank account debited to calls in advance account. Now on calls in advance, it is 20 shares at the rate of, for your final call, rupees 5, at the rate of rupees So this gives us rupees 100. Okay, and remember they've said calls in advance, calls in arrears, a certain amount of interest is to be charged, a certain amount of interest is to be paid as well. Okay, so that we have to keep in mind. And okay, we can do that. Okay, firstly we have to charge the interest amount. Okay, so on your calls in advances, we have to pay a certain amount of interest, as we've already said. So we can start with the payment of your interest. So interest on calls in advance account, interest on calls in advance account, debited to, now who is going to be paid? It's not your share capital, it's not your company, right? It's the shareholders who are going to be receiving it. So to equity shareholders account, equity shareholder. Now there's just one shareholder, they said, or maybe more. So equity shareholders account, we can just write equity shareholders account because there are multiple shares, right? 20 shares. Now remember, in case of calls in advance, we've already given, in case of calls in advance, interest payable is at the rate of 6% per annum. Okay, so we have to calculate it at the rate of 6% per annum. Calls in advance amount is rupees 100. Rupees 100 we're getting from this area. Okay, rupees 100, and rupees 100 at the rate of 6%. Now we have to also write a particular timing. Now the timing is between the date from which they've paid until the date on which it's supposed to be received. So it's given here, first and final call is 3 months after allotment. So the timing will be into 3 divided by 12. Okay, the reason why it's 3 out of 12 months is because 3 months after allotment. So the timing between the timing when you've paid and the date on which it's actually supposed to be received. That is the period for the interest. Okay, so 3 out of 12, this should amount to rupees 1.50. Okay, this is due. Now let's pay our shareholders by equity shareholders account, equity shareholders account, rupees 1.50. Okay, this is interest on calls in advance. So interest on calls in advance, rupees 1.50. And then similarly, in case of your calls in arrears as well, make it due and then let's pay it. Okay, so in case of interest, it'll be, we have to pay it now. Okay, we have to call for it because in case of calls in arrears, it is a punishment. So it should be equity shareholders account, equity shareholders account, debited to interest on calls in arrear account. Now calls in arrears, interest is charged at the rate of 5% per annum. So calls in arrear amount is rupees 900. Rupees 900 at the rate of 5%. And again, this also will be 3 by 12. Okay, you're supposed to pay in the allotment, but you're paying it in the first call, which is after 3 months. Therefore, 3 divided by 12. Only for 3 months, you're going to be getting punishment. Okay, so for that, the total amount is rupees 1.13. 1.13. Make sure you're doing the calculations as well, just in case. I could be making mistakes, but you know, just in case. Okay, so now we have to pay them. Okay, we have to pay our shareholders. Now when it comes to calls in arrears account, let's not pay them yet. Okay, let's not pay them yet. Maybe there's another calls in arrears in the future. Okay, so let's just leave it first. But calls in advance, I've already recorded it because anyway, even if it, I don't, because yeah, there are no further calls to be made. Okay, but as it comes to calls in arrears, you maybe the shareholder fails to pay the final call also. You don't know, right? So let's leave this equity shareholders account to interest on calls in arrears account first. Let's not record it on our cash book. Let's not pay it off yet. Okay, so then let's move on to our final call. So firstly, the due entry, equity share first and final call account, debited to equity share capital account. This is 1000 shares at the rate of rupees 5 each. So it should amount, 10,000 equity shares. Rupees 50,000 in total. Due entry. So now let's receive the money. Bank account debited to equity share, first and final call account. So to equity share, first and final call account. Okay. Now in case of your equity share first and final call account, remember we had received calls in advance. Okay, we have received already calls in advance rupees 100. So that means it'll be only 50,000 rupees minus 100 rupees. So this should be total receipt of rupees 49,900. Okay, I hope this is clear. This is how much we're going to be paying in case of our how much we're receiving to the share first and final call account. Okay, now additionally, if you remember in the question they've given, calls in arrears for allotment paid with first call. So on 30 shares, we had an arrear of rupees, we had an arrear of rupees 900, right? Of rupees 900. Now this amount, we are supposed to receive it with our first and a final call. So now we can receive this amount of your calls in arrear. So it looks like I added an extra 0 in our journal entries. 30 into 3 is 90, not 900, my bad. Anyway, so we can receive the calls in arrears amount now. Okay, remember it's received along with your share first and final call account. So you could have added it there, but it's best to write it separately so that we understand exactly what it is. So to calls in arrear account, amount is rupees 90. Now if you want, you can just write it for yourself, for your understanding. Received with first call. Okay, for your understanding, you can just write it, received with first call. Okay, so that also has been done. Now the next thing for us to do, now for sure, there are no further calls in arrears. So this interest now we can pay off to our, this interest, we can charge it from our shareholders. So it'll be to equity shareholders account, equity shareholders account. This is the interest chargeable 1.13. This is interest on calls in arrears. Okay, so there's nothing else for us to be paid, nothing else for us to charge. Cash book can be closed, but before that, remember we had a calls in advance, right? We had a calls in advance, which was paid off in our allotment for our first and final call. So firstly, we have to make that adjustment. Okay, this calls in arrears amount, calls in advance amount that we've received, we have to adjust it with our share first and final call amount. So the amount will be calls in advance account, because here if you see, share first and final call account is 49,900, right? However, you're supposed to be receiving the total amount of rupees 50,000. So in order to adjust that, it will be calls in advance account debited to equity share first and final call account, which is rupees 100. And narration being calls in advance adjusted against the amount due on first and final call. Okay, first and final call. Now, if you're having confusions understanding this, we could just write a composite entry. Okay, using a composite entry, we'll be able to understand it better. So the composite entry will be, firstly, the due entry, right? When you're making the due entry, it'll be share first and final call account to share capital account. So I'll just write it here. First call debited to share capital. So amount is rupees 50,000. So when you're receiving also, you should be receiving the same amount, right? It should be reflected the same amount. So it should be bank account debited, which is 49,900. Remember, we're on a certain amount of shares. How many shares? We've already received in advance. On 20 shares, we've already received in advance, rupees 5, right? So to first call, rupees 50,000, and the balance amount, which is 100, was on your calls in advance. This is your composite entry. This should have been the entry if we do not have the cash book. Okay. So we can now close the cash book as well. So let's close this amount, and you should be getting a balance amount. Remember to write the total by balance. Closing balance is 99,999.63. Okay, that should be your balancing figure. So make sure you're writing the totals also here. Okay, so this is the solution to this problem.